How much tax will you pay on $60,000 in the great state of Illinois? That's what we're going to talk about here today. And I'm telling you, you're going to be surprised. You're going to be surprised. So hang in there with me because if you're thinking about retiring in Illinois or you're already in Illinois and you're thinking you're going to stay there, you're like, oh, the tax man's going to eat us alive. You're going to have some surprises. Now, again, we're just talking about income tax, my friends. We're not talking about property tax. That's a whole different can of worms. But when it comes to income tax, hear me out. So, all right, so welcome to Heritage Wealth Planning YouTube channel, my friends, the place where you come to learn all about taxes in Illinois and all the other 49 as well. So if you like what you see here, don't forget to subscribe. And then, of course, hit the little bell, and I think it's down on the bottom down there, I think, to be notified for future content. So let's dive right into it, my friends. All right, so here's the Heritage Wealth Planning Facebook, Heritage Wealth Planning URL, heritagewealthplanning.com, the website. You go up here to Tax Tools, and you see the little drop down that says Interactive Tax Tool, I think is what it says. And then it takes you to the first page will be the Federal Interactive Tax Tool from the Tax Foundation. Highly encourage you to run your own numbers. You want to be Sophie and Chad or Joe and Ethan and Laura and Seth, you name it. Then we're going to go down to Smart Tax Tools. From smartasset.com. They gave me the ability to post this on my website, which is nice. And we're going to go to the great state of Illinois. Interesting. Illinois is in a darker blue. Why is that? I thought Illinois is so horrific. Full Smart Asset puts Illinois in as tax friendly. Isn't that interesting? Who would have thunk it, right? Who would have thunk it? Well, I didn't until I started doing these tutorials. And I was stunned. I'm still stunned. So as we always do, we start with $40,000 or $60,000 of total income. In this case, we got $20,000 from Social Security, $40,000 from IRA distributions or 401k distributions, however you want to call it. And we see we pay nothing to the state of Illinois, but we do pay $2,871 to the feds. So even though we pay nothing to the state, we are paying a pretty significant tax hit to the feds, and I'll get to why here in just a second. Let's flip these numbers around. It's going to be even better for you. $40,000 of Social Security and $20,000 of IRA income. And what happens here? We pay nothing. So you can literally have $5,000 a month in income in Illinois and pay no income taxes whatsoever to the feds or to the state. Now, if you have income tax if you have $40,000 of IRA income, you still pay nothing to the feds. But nothing to the state, but you still pay almost $3,000 to the feds. Why is that? I can hear the screaming and lamentations. Lamentations? I don't know what's called. Anyway, all over the fruited plain there, or what's the great state of Illinois? The Lincoln State? What's it called? The Illinois. I can't remember what the name of the state is. Lincoln State? Land of Lincoln. That's what it says on its tag. So first thing we got to do is we got to look at our provisional income. All right, so provisional income is how much of your Social Security will be subject to income taxation. How much of your Social Security will be subject to income taxation, your provisional income. And what we do is we take 1/2 of your Social Security benefit plus all other income. So half your Social Security plus all other income, that equals your provisional income. So in this case, our Social Security benefit, when you have $20,000 of Social Security, 1/2 of that is $10,000. All other income is $40,000 of IRA. That's $40,000. We add the two together, and we got $50,000 is our provisional income. Now, the irony of it all is that if you had any tax-exempt interest, that is also included in the all other income category, which would make your Social Security more taxed. A lot of people think tax-exempt municipal bond interest is tax-free. Well, it itself is tax-free, but certainly not tax-free when you factor in Social Security. So we got $50,000 provisional income. Now, there's 3 bends of provisional income rules. You got 0 to $32,000 if you're married filing jointly, and that is nothing is taxed. So $32,000 provisional income, nothing's taxed. 32 to 44, 50% of whatever that amount is subject to taxation. In this case, it's $6,000 total because we have 50,000. I'll show you here in just a second. 44 equals 85% equals 5,100. Let me show you what I'm talking about. All right. So in this case, we got 50,000 of provisional income. The first 32,000 up to 32,000, nothing is taxed. Between 32 and 44, 50% of that amount is taxed. Well, we have 50,000 of total provisional income, which means we have 12,000 in this bucket, which means $6,000 of our Social Security benefit is subject to income tax. Anything above $44,000, 85% of that is taxed, which in this case is $6,000. 50 minus 44 equals $6,000 times that by 85%. That's $5,100. So the total of our provisional income is $11,100 right here. So now what we do is we take our $11,100, we add that to all of our other income. This is not tax exempt interest now. This is simply we're getting our AGI, our adjusted gross income. So we take our 11,100 of Social Security that's taxable, plus all of our other income, and we got $51,100 is our total AGI. Let me actually erase that, make it a little bit cleaner. Excuse me, my friends. 11,100, 40,000 equals 51,100 is our AGI. All right, now we're married, filing jointly. We're over the age of 64, which means we have 26,600 in standard deductions. And that means our taxable income is $24,500. $24,500 is our taxable income. We get the first $19,000 roughly is taxed at 10%. Any amount above that is taxed at 12% until we break $77,800 of taxable income. And that's how you figure it out right there. Easy as pie. Now, when we reverse those two, we had 24,000 of total adjusted gross income. When we had 40,000 from Social Security and 20,000 from IRA distributions, because then our provisional income was $40,000. Half your Social Security, all of your other income is $40,000 of provisional income. What that means is the first 32,000 of that 40,000, none of it's taxed. So the only thing we had subject to income tax in that regard was a $4,000, which is $8,000 from 32 to 40, half of that. So $4,000 was added to our taxable income, our adjusted gross income. So we had that $4,000 of taxable Social Security plus the $20,000 we had from IRA distributions. That's $24,000 of adjusted gross income. But guess what? Our standard deduction was $26,600, which means we pay no income tax whatsoever. I'm telling you, man, don't overlook the benefits of Social Security. It's huge. All right. So now I want to show you what the most tax-friendly places are in the great state of Illinois. The towns, I should say, because I think this is pretty interesting. And smartasset.com has this wonderful tool that'll tell you what the most tax beneficial places are in the state, and in terms of property tax, in terms of sales tax and whatnot. Now, what we're doing here is we're taking a guy or a lady who's retired. They have $15,000 from Social Security, $15,000 from IRA distributions, a $10,000 pension, and a $10,000 earned income. So they have $50,000 total, not the $60,000 I was just telling you about, but $50,000 total in that capacity I just told you about. And so we're going to say, what does that person pay? Now, here's number two. What's that? That's what is number two there? Round Lake Park. Never heard of it. Don't know anything about it. What's number 5? That's Springfield. Pope. Don't know anything about it. Anyway, so you can see most of the most tax-friendly places are in the South. Number 3, I don't know any of these places. So let's keep going down here. And you all might know some of these. We got Mount Carmel. I've heard of Mount Carmel, Illinois, and I think that's the only place I've heard of. Just because I've driven through Illinois maybe once or twice in my life. All right, so if you're that person I just defined for you, $5,500 is your income tax paid. Because remember, this is different than the guy I just told you about, because we do have $10,000 of earned income plus the other stuff. Property tax rate. See, that's where Illinois gets you, man. Property tax, 1.75. And what they do is they take all the median, half above, half below, property taxes paid, divide by the median property value of the home in that town, Mount Carmel, Illinois, and then that gives us a property tax rate of 1.75, which is high. Sales tax is $973, which is quite high. Fuel tax is not that high. It's about average. That sales tax is big. So as going back, income tax, Illinois is good. Property tax, horrific. Sales tax, bad. But look at that. Retirement tax friendliness is 55.77. This is where I differ from Smart Asset. I would have done property taxes. See, what they're doing is they're taking income taxes 4 times, property taxes 3 times, sales taxes 2 times, and fuel taxes 1 time. So they're giving weighted averages here. And so basically income tax is 4 times more of a weighting average than Fuel tax, I would have done differently. I would have done property taxes number 4 as number 1, the most weighted thing. Income tax number 2, sales tax number 3, and fuel tax number 4. But because that's not bad. I mean, you're looking at from smartasset.com, 55.77. Illinois is a heck of a lot cheaper to live from a tax perspective than Connecticut, than Maine. I mean, just a lot of states in the Northeast for sure. It is. No getting around that. I haven't looked at Pennsylvania yet. Some like Alaska is 99. Some of the southern states are 77. Alabama is only in the 50s too. So Illinois and Alabama, he's giving me a hard time convincing me that Illinois is more tax favorable than Alabama. But no, that's what Smart Asset says. So it's pretty interesting. As always, if you like what we see here, don't forget to subscribe. We're doing all these states, so don't forget to watch in case you're thinking about looking someplace else. Or if you're thinking about going to Illinois, this could be helpful to you. So subscribe, comments, thumbs up always help me. And of course, as always, just go to heritagewealthplanning.com and click on your own, run your own numbers. I think you'll get a lot out of it. All right, thanks now. Bye-bye.